Hello. Uh, Today we'll be talking about the cooling measures that struck on 15 December, late at night. I think it's around 11:30 p.m. That means the government only gave us half an hour to react for those people who were trying to rush in because they were bordering on they were directly affected by the change in the new rulings lah that which the cooling measures were affecting them. So the effects came in directly just half an hour later, which was at 12 a.m. 16 December. So naturally, I remember that night I was just coming back home, just reaching my place, and then I received the text about cooling measure, and then I was still driving one, so I couldn't really read yet. Naturally when I was driving, where I was panicking already because I'm like, okay, so what's the new thing coming up? I don't even know whether is it a major cooling measure or minor cooling measure, although I was pretty much confident that it was going to be a relatively minor one lah, because it doesn't seem like the market is on the crazy bull run like it was between 2009 to 2013. Okay, so after I park my car and then I read the measure, and I realized, okay, my general consensus at that point, I remember, it was that it wasn't so painful lah. Okay, but naturally, a lot of people, a lot of my clients started texting me, hey, what's the new cooling measure about? Does it affect me or not? That kind of thing. I think it's very common, very normal. Most especially even those of you who had already purchased already, you would have been worried whether it's gonna affect your purchase. And then thankfully, what we know is that all those who have purchased the day before, which is on 15 and before, shouldn't have to worry lah, unless your OTP is subject to changes on or after 16 December. Then something is not going to be so simple. Then I have to check with the lawyer. Okay. And as a disclaimer, all of these that I'm going to talk about today is based on my own point of view and most of my own research, and doesn't represent anybody else. So this was the one that came in from M&D website. There's measures to cool the property market, and then we'll see. Their rationale is that the private and the HDB markets have been very buoyant. Obviously, all of us who have been watching the market would have known very clearly what has been happening over the past few, or rather 1 year plus lah. And then let's take a look at, even though house price to income ratio remain below their historical averages, there is clear upward momentum. That means they know that there's quite a strong momentum, and hence they don't want it to go too fast lah. I mean, they want the property market to go up, because if the property market doesn't go up, then people are not going to be happy for sure. But they don't want it to go too fast, because you need to think about it. We are not just managing Singapore in our lifetime. We're trying to make Singapore sustainable in the long term, maybe go on for a few more decades, hundreds of years, that kind of thing. So we have to think about our descendants also lah. Okay, and especially nowadays with the low interest rate, people are naturally attracted to the property market. There are some people who are, hey, go and buy now because the interest rate is low, but they don't think about what's going to happen next time. So generally, as a guideline, I know for sure interest rates are going to go up. So when I calculate, I will definitely calculate a much higher interest rate to accommodate the increased rates next time lah. Okay, and what they say is like, all these measures are calibrated to dampen the broad-based demand, and then so that people are more for own stay rather than for investment. And they always highlight this. You remember there was a MAS article earlier this year. They say, market is not overheated, blah, blah. And then at the end, they say that they've been watching the market, which is aligned with this. This is directly also from the M&D website. And then the measures undertaken are to promote a stable and sustainable property market. So this is what the government has been repeating on and on and on again. That their aim is not to crash the market. Their aim is to promote a sustainable and stable market. And so at least people won't go crazy and go for fire sale, that kind of thing. That's their main intention lah. So we need to think about their point of view, because when you have a market crash, there are a lot of people who will lose a lot of assets, and that will cause a lot of disruption to the society, which is what the government do not want. And hence they will rather, I throw in cooling measure here and there, but at least the property market is stable. Okay. And then let's take a look. 2018, this was the measure. As you can see, after 2018 measure, okay, after the 2018 measure, this one increased by 5%, 5%, and then this one no change. This one is a SPR. So these three are Singaporeans, these three, or rather these two are SPR, and then foreigners increased by 5%. So generally, most of it increased by 5%. Other than developers, they have to increase 10% for any entities. Even let's say you buy on a company, you will gonna 25%. And that was the 2018 measure. On top of that, LTV also decreased from 80%, dropped to 75%. So 5% less that you can borrow. That was back in 2018. And then the recent one, which we need to focus a little bit on, you can see that the first property for both Singaporeans and PRs have no change. So for those of us who are buying our first property, we are buying for own stay, the government is not going to touch you, because the government understand that we have our own plans. We all have our own dreams that we want to fulfill, and then it wouldn't be fair for most people to be denied of their chance. Sorry, there's this phone call coming in. Okay. But what they want to clamp down is the 5%. The second and third property, 5%, and then the third one from 15% up 10%. So what they are trying to do is that they're trying to stop people from accumulating second or more property under the same name. Of course, there are ways to go around, but what the government wants is that, yes, you can go around in your own way, but what we want to do is that we want to reduce the number of people still paying ABSD, because there are still people paying ABSD, especially in recent months. Foreigners from 20% up to 30%. 10%. And then in the first place, 20% was already very painful. And then now you from 20%, you're up to 30%. So if you are a foreigner, will you be buying property here in Singapore? And then later we'll zoom into what is the intention behind all this. Developer also, or other companies and developers in general, 25% to 35%, so a 10% increment. TDSR, what we need to know is that 60% dropped to 55%. I think most of us who have been watching the market, that total debt servicing ratio is quite a market killer in 2013, because last time there's no such thing, 100%, 90%, whichever it is. Last time there's no income ratio. But after 2013, from 100% pretty much, you drop to 60%. Okay, last time is that you got down payment or whatever, then they will then they can just borrow. Sorry for this distraction. Okay. And for HDB side, LTV 90% to say 85%. What you can see over here is that for those of you who have been looking at bank loan, yes, you are not affected because bank loan is only loaning you 75%. Whereas HDB, usually they can borrow 90%, and then they will drop to from 90% they drop to 85%. Later we'll look at what is this intended for. And then we look at the price trend for HDB first. You can see that after 2013, right? Okay, 2013 over here, you can see after the TDSR period, prices pretty much drop and then stagnate for a very long time. After circuit breaker lifted, it shot up in a super fast manner. And how many of us who see this are not scared? I think most people will be scared. Sellers will be happy, but buyers, you realize that if you're going to buy another HDB flat, you realize you're trapped by this very terrifying price trend. Okay, and I have some of them who told me, what do you call it? They bought a 5 room in Sengkang. Then now they are sitting on 100K appreciation in Sengkang. So for those of us who know, HDB has been stagnating for quite a long time. And then now you're telling me that, oh, appreciate 100K in just a few months or 1 year. This is quite incredible, I would say. And naturally, this doesn't sit well with the government, because what they're trying to do is, like what they say, promote a sustainable and stable market. And then you have this whole trend, straight line. So isn't this similar to last time where government threw a whole bunch of cooling measures, 10 plus to I think about 12 or 13 cooling measures during this whole period? You see, this is parallel. And this is what the government doesn't want. I mean, if I were the government, I wouldn't want this, because this is going to cause a lot of social unrest next time if this continues going on. And naturally, it will just be a matter of time. It's just that we did not know when exactly the government wanted to clamp down. And then the next thing is that we take a look. We have housing board rising for 17 consecutive months, so almost 1.5 years. Price hikes were seen in both mature and non-mature estate. Just November alone, you have 29 changing hands for more than $1 million. Previous one that was setting a record was back in August 26, 29 flats transacting over $1 million. That's how bullish the market was. And then there were a total of 82 for the whole last year. This year alone, in the first 11 months, they were really $223 million flats. Last time we think about $1 million, like xiao. The first thing you say is xiao. And then now we have 200 plus selling above $1 million. Okay, if you ask me, I still cannot really accept. But these are the prices that people are really accepting in the market. And then property analysts are expecting the robust to continue into 2022. If I'm not wrong, this news came up before the cooling measures, and then these are what they expect. But then we all know by now that you throw the cooling measure, what's going to happen, we'll see. Okay, and the reason for all this sudden increase, super fast increase in HDB prices are generally due to the longer building time, because of site constraints, tall building heights in certain projects such as Queen's Ark, and also the Rochelle one, which is the PLH or this lah. And they are going to take, instead of the last time 3 to 4 years, they're going to take 6 years. How many couples can actually wait? It's like yesterday I just read this reporter or something. She was just telling a story, last time she was thinking, after come out and work already, then I will then go and BTO with the boyfriend, and then maybe 3-4 years can get Kima. Now they are saying, wow, 6 years, 6 years. That then I really don't want to wait already, because by the time 6 years, even the kid come out already, the kid don't know how old already. I'm going to go to primary school soon already, and then I better get my flat. And then these are some of the worries of people, and hence they turn to the HDB resale market. Then we look at the private market. July 2018, cooling measures came in. You see, before that, the en bloc fever drove up the market. And then after the July 2018 period came in, market stopped and then stay stagnant. But if you realize the HDB one, 2018, it didn't affect them. Why? Because HDB people are not paying ABSD. HDB people, they are taking, some of them taking bank loans, 80% to 75%. And maybe that's why after that dropped a little bit, but not a lot, because there are still quite some people taking HDB loan. In fact, there are still a lot of people who subscribe to the old school thinking that must take HDB loan, because if I default, they won't chase me out. Whereas if I take bank loan, then bank loan if I default, then they will chase me out in just a few months. I don't think that's really the truth, because if you keep doing this, then I won't go and pay HDB. I will just take HDB flat loan, and then I won't go and pay really, because if I pay that, then if I don't pay and then I still don't get chased out, then who will want to pay? Okay, yeah, I think it's just a normal old school thinking that HDB loans are safe lah. But anyway, that's another topic for another day. And then we look at the private again, 2018. After that, stagnate for 2 quarters starts to rise again. It didn't drop or rather control until COVID came in around this period. And then after 2 quarters where the circuit breaker was lifted, that's when the market started to run again. And this is a cause of concern for the government because like what we were looking at just now, near like similar to the HDB one, you look at this, it's quite similar rate of increase, right? Okay, quite parallel. And this is what the government doesn't really want. You can see the last time they run for a few quarters and then they climb it shut, run for a few quarters, climb it shut. And in between, maybe they wanted to throw something else, but COVID did it for them. And then they were like, oh, okay, luckily I don't have to throw. This article came out 15 December. So maybe this article, who knows, may be the deal breaker because of what government see. Wow, 16 months in a row increase. Guess what? We are going to throw down the hammer. Okay. No pun intended. Recently, I'm not going to talk about the hammer politics recently. Okay. And then back to this. You can see rising demand, total volume, volume for resale, generally quite buoyant, I would say. And then the price point really rose a lot. Those of you who have been watching the resale market, you realize that some of the price increases were way worse than the new launch market, because we know that new launch market can increase price fast. But some of the new resale market can increase 200-300K within a few months. Okay, depending on the size of the unit also. And then we look at this one is the resale price and volume. And as we can see over here, after CB was lifted, price trend went all the way up. So this was how scary it was. Keep in mind, after COVID, the prices tanked because of sentiments, and then buyers were like, if I don't sell low, then I cannot get rid of my house, then I cannot buy the next one. And then they just accepted lower prices. And then after that, when the news got around, the seller knows that it's a seller's market, that's when they started pushing out the prices. Some of the examples, Livia, Envy, Palette in the Pasir Ris area, they increased 80%, 21%, 27%. 27%, how crazy it is. Imagine this time you buy $1 million. This time you buy the same unit for $1.27 million. And if you times 2 for $2 million quantum, you're looking at $500,000. That's how scary it was. As for the east side, you have Costa del Sol, Mandarin Gardens, Villa Marina, Eastern Lagoon. After COVID came out, and then we come out of the CB period, this one, Eastern Lagoon, went up by 36%. And then you have the blue one, which is Costa del Sol, 24%. Mandarin Garden, 22%. Villa Marina, 23%. That's I would say absolutely mind-blowing. Now you know why. I would say, it's not to say that I'm not a fan of resale. I'm a fan of resale when it's a buyer's market, because I'm looking at property as an investment. I'm looking at, if I want to stay in a property, I want my property to appreciate. Of course, I understand that not everyone thinks that way, but for me, I prefer to stay where prices can appreciate, so that I get a free stay and I still get to earn money on top of being, or rather I would say, to make it simple, I like to be paid while staying in a condo rather than pay to stay in a condo. And then we look at the first part of the cooling measure, ABSD, which wasn't a stranger because it dates all the way back to 2011. Last time, only Singaporeans owning the third property always need to pay ABSD of only 3%. So actually, it's not painful at all. 3% is less than our buyer's stamp duty there. Nowadays, less than our buyer's stamp duty. And January 2013, it was increased between 5 and 7 percentage points. After 2013, after the en bloc fever, ABSD was increased again. So it was increased the second time. Now recently increased the third time to just now what we mentioned just now. Okay, all these numbers we don't need to memorize. I don't need to keep saying. You can go and take a look. It's over everywhere in the newspapers. And then we take a look at the price history again and what are the effects, some of the effects. For Singaporeans now, the new after the new green measure come in, Singaporeans buying second and third onwards, the ones they will be affected likely will be the high-end one, because all these articles are from this one, Business Times, only about a few days back, right after the cooling measures came in. The investment demand should moderate, should stagnate or go down because of the amount of ABSD that they have to pay. They are increasing, I wouldn't say very, very, very high, fast increase. There are increasing numbers of people paying ABSD, or from what we know, from what we heard from the ground. But whether is it a right choice, that really depends on their objective. Some people, not everyone buys properties for investment. Some people buy for, as a trophy product. Some people buy for to let their kids stay. Some people buy to, just to hedge against inflation, whichever it is. But there are people paying ABSD. Okay, but generally my clientele, I wouldn't advise them to pay ABSD, because the clientele that I serve generally want to make money from property. So if you pay ABSD, then how are you going to make money from that? Okay, I really don't know, because we all know that today's market is pretty much subdued. It's not to say that we cannot make money, but we have to be very, very, very particular on what we are doing in order to maximize our chances of making money. The next one we have to look at SPR. I think not really much, because most of the SPR, the ABSD is really quite painful. So most of the SPR wouldn't be buying too many properties in the first place. The one that we want to look at is the foreigners and the entities, which are especially the developers. 20% to 30%. So as we know that most of the foreigners will like to buy, the CCR region. 20% was already enough to deter them. Now you up to 30%. So does it mean that the government is actually planning to let the foreigners come back in? But they're throwing the message, you want to buy? You can buy 30%. You see, want to buy or not? And with 30%, how many will actually buy? So will this dampen demand, especially in the core central region, where most of the foreigners are looking, or rather most of the foreigner buyers are looking at? And I think I did a video on CCR 1 or 2 months ago, how I don't really see much potential in the next few years for price appreciation, because of oversupply and also some very, very subdued foreigner demand. And now we have this, so I think it's pretty much sending the same message. This one is the one we want to be a little bit more particular about. 10% extra for developers. So if they don't finish selling the land from acquisition within 5-year deadline, then they will have to pay this 35%. Once they pay 35%, they don't just do charity. That means they don't just do the whole project and sell for nothing. They have to run a big loss. So a lot of developers, how will it affect them? They will be less likely to bid for bigger land. They will prefer, I would say, more or small to mid-size land, because it's easier to sell, finish. If I have I would say 400 or lesser, 400 and lesser units to sell, will be easier as compared to maybe let's say 1,500 unit project. And let's say Mandarin Gardens, if they go on block, they have 1,000 units now. How many must they build to make for a big profit? Okay, definitely have to build maybe about 2,000 and then will the developers will they be optimistic enough to go for this 2,000 units within 5 years? You need to sell, and then 35% ABSD rate. How many is able to stomach? Okay. And this article just came out today only. There are about 10 on block sites they were successful so far this year. The one that is highest in quarter obviously is the Peace Center one, 9 years or more, followed by the High Point, which is the ultra high-end property that Shunta is planning to build. There's a specialty. And then we look at the transaction volume for on block market. I don't think we are headed for the mega on block market fever yet, but we are similar to this period, because the previous mega on block was 2007, around there. Then it should generally only happen around every 10 years from what we observe, but it doesn't mean that it won't happen. But now that there's a new cooling measure, will that still happen? I really don't think so. But will it still be like this? I think probably yes, because developers, they still need the land. Without the land, they cannot do business. And how to answer to shareholders? So we can see last year, on block total volume 127 million. This year we have already more than twice the volume, more than 20 times the volume for 2021. So without this new cooling measure, will the government, will the onboard people reach this kind of stage last time? Okay, but now that we have cooling measures, I really don't think so. It will be harder for on block hopefuls to get through because of the developer sentiments. They are scared, especially if your land size is big. They may not have that risk appetite to digest that 35% risk to sell within 5 years and then to sell more than 1,000 units. The one that recently got affected was the Perfect 10, like what we see on the cover page just now, Perfect 10. Also, high-end luxury market only sells 5% after new property curbs. They then got 5%. They then got 5% discount if you bought over the weekend. But was that enough to attract the buyers? We'll see. But anyway, most of these luxury condos, they are not expected to be snapped up as fast as Canning Hill peers because there is still a little bit supposedly borderline on the mid-high market but this one is more for a high-end market. Okay, and the land size is also I would say it's a very, very, very different product so it's hard to compare apple to apple in this sense. Okay, but this is the first one to be on the chopping board. You can see. Now, this one is a little bit more interesting. We look at the amount of ABSD that was paid during the past, I would say, 10 years. After buyer stamp duty first came in December, this one is expected because it came in December only. By January, you can see 2021, 2112, people are like, still need to pay, man, but they still paid all 8,000 plus. 2013, so many of them paid. The government don't have a choice but to slap down the cooling measure. And then after that, TDSI all came in, more subdued already. From 12,000 becomes 7,000 plus, and then starting to build up again, 8,000 plus. Then back to 12,000 plus again. I think this was where government started to feel, maybe it's time for us to cool the market a little bit. And guess what? July, they stepped down the cooling measure, increased the ABSD again from 12,000 dropped to 9,000 plus. After 2019 onwards, it was 5,000 plus, 5,000 plus. And I believe this year should have been more. Data is not out yet, obviously, because we haven't finished a full year. And even then, they will take some time to accumulate the data and then compile them. But I foresee this one would have been, 2021 would have been more. And hence what they are when they see the number, they decided, okay, guys, it's time for us to throw in cooling measures. So this could be an indication. Now we'll see. CCR predict that they will be heavily affected by this new cooling measure. The one that is going to be hit hardest will be them, because if you take a look at the supply, this has been done by one of my teammates in my division, Linda. So thanks to her, we know this is a very painful job to recompile. So I'm really grateful that she's doing the job for us. And then you can see CCR, there are so many of them in the green. So almost about half of the supply still available in CCR. Whereas if you are looking at RCR, these guys are gone already. These are pretty much gone. And then you only have maybe this chunk that are still have quite some supply. This one not really already. So I would say only this chunk for RCR that still have a decent supply. Whereas for OCR, it's worse, only this chunk that has really decent supply. The rest are like pretty much gone. And then why are we showing this? Because if the developers are sold mostly, they are like 80-90% sold, and then they have 2 to 3 years extra to sell because of the ABSD extension due to COVID, then will they be pressured to reduce the price? If they are pressured to reduce the price because of overwhelming supply that they may not be able to clear, will these guys gonna the ABSD deadline, the ABSD penalty if they don't sell within the deadline. Whereas these guys, they are pretty much so they do not. I really don't foresee them dropping the price because they don't have to. They can just hold on, wait for the market sentiment recover, maybe after a few quarters, and then start selling at the same price or even higher, which I believe will be the case because history has really proven that after the 2018 measures, 2019, 2020, you can see the prices started going up again. Okay, so needless to say for OCR, the one with the least supply actually. And hence we sum it up for ABSD impact, very little impact on first home buyers. So those who are really genuinely buying for home stay, they will have basically no effect on them. Okay, other than TDS and all this, but ABSD wouldn't affect them. This is more like a high net worth. One of my clients was saying, oh, it's like a health wealth tax, which is true. I feel this is true. I think we are still in a very, very, very early stages of planning the inheritance tax. I remember MAS was thinking about inheritance tax, that kind of thing, or capital gains tax. I think they are still in very, very, very early stages of planning that. And hence, high net worth people, those who are able to afford the ABSD and don't mind paying ABSD to accumulate, they may be deterred a little bit by the new ABSD increment. And this is to help reduce their accumulation of these luxury properties, or maybe not just luxury, maybe even RCR, OCR, some of them who are looking to accumulate properties in general. Foreigners are further discouraged because of the 30% from 20% to 30%. Last time it's really so painful. Now I want to make it like it was 30%, or let's not think about it. Maybe I ran, maybe it's a lot more cheaper. TCR, like I said, likely going to be more impacted because that is where the foreigners are buying last time. And then now supply is still the highest. And hence CCR is going to be the one that, for those of you who are shopping in the CCR, you are looking to accumulate properties. But if you're looking to make money through CCR, I would say go look at my CCR video. But if you're just looking to buy up, and then you are losing, you want to buy it out as a your first home, then you can consider if you're not looking to make money. If you want to make money, it's not going to be that simple as, CCR is going to be impacted. TD says CCR is going to be impacted, and then I go and buy. It's not that simple. And the last but not least, en bloc is discouraged because, especially for the large projects, due to developer risk of paying the 35% instead of the 25%. Last time really painful, like I mentioned, for foreigners. And then now 25% becomes 35%. Within 5 years, I need to sell. Then, so I think developers will be more looking more for the palatable lands, such as the small to mid size ones. Okay, for the upcoming GIS or a block. The next part, okay, today's talk is going to be quite long, so bear with me if you don't mind. TDS, 16% drop to 55%. Let's look at the impact. This one is quite a quick one. This one is from a website that probably hasn't updated. So I key in the same amount of income, I key in the same age, which is the 30-year loan, and they haven't updated, obviously, I think. And hence you can see for 60% TDSR for 14K 35 years old, 14K monthly income, 35-year-old couple. Okay, which I think in today's context, we have quite some of these couple that are 7K each. They are able to afford a loan of 1.87 last time. They can afford a property up to almost 2.5 million. But after this TDSR came in, it was they can afford instead of 1.87, they can now afford 1.71 million loan, which means that their maximum purchase price from 2.5 dropped to about 2.23. Okay, so a difference of about 270,000 difference, almost around there. Okay, and if you are thinking about the impact of this, I would say generally I don't think too much of a problem. Because why? Most people wouldn't be stretching their 60% TDSR. Okay, most people they want to have a little bit of security lah. So most of them are not planning to push the boundary of 60%. Maybe some of them they have maybe they just change job, or maybe their job nature is that, or yeah lah, they just change job and then the salary haven't go up, so they expect their salary go up, so they can push a little bit 60%. Then if they're looking to buy now, maybe they'll be affected. But in general, most people will be looking at 50% below. Okay, especially those of them who know that pretty much their income level and for given their age is pretty much stagnant already, then they will be not looking to max out 60%. And hence, these people will likely be unaffected by the TDSR. What they are trying to do for this TDSR reduction is that they want to lower maximum property price so that you don't be as high for your resale price lah. I mean, it's not that you cannot afford it, it's just that you have to be a little bit more cautious, because what they are preparing for is the upcoming interest rate. They have been sending multiple warnings, say, hey, you know, interest rate is so low already, you guys have to be a little bit more, do a due diligence, don't just go and buy just because interest is low, next time interest is high. But people are still buying, so they're thinking, okay, guess what? Instead of 60%, now you guys can buy 55%. What they're trying to do, they are reducing risk of a fire sale next time. They don't want this to happen. Okay, so that's the whole rationale of it. Harder for decoupling because especially a middle income, they want to decouple, especially you have 7K guys. They want to buy one resale and go and stay now, go buy one new loan, go invest, or whichever it is, which is quite typical plan. Maybe some of them will even 7K go and buy new launch, they want 7K also go and buy new launch. It's very common nowadays. But because of this reduction, 60% to about 55%, a lot of them cannot afford it, because nowadays the new ones, the entry quantum is already about 800 to 900K minimum. And hence, this will make it difficult, a little bit more difficult for middle income people to do decoupling. Why they're trying to do this, because they're trying to cool the whole private market, but they don't want to crash it. So the word is cooling measure. There is not market crasher. Cool. What they want to do is they want the market to go like this. Okay, they don't want the market to go like this. They want it like this. And what they do is like this. Okay, cool, like this. So that's the government strategy lah. And then because of the recent buyer sentiment, that's why they want to cool it, especially in the resale side, as we can see just now in the chart already. One thing that some couples may be affected is that ABSD remission, because they don't want to sell their house first. They are attached to their house, but at the same time they feel that renting is more expensive, not worth it at all, because they haven't really done their calculations properly, and hence they're either that or they are too emotional with their pace, and hence they say, okay, now I pay ABSD first now, and on top of just paying ABSD, they have to deal with a lower LTV, because the first one that you borrow is 75%, next one you borrow is 45% already, and then that means you have to come out with 55% upfront. Now last time it's 12%, now 17% ABSD. So now if you want to come up with you want to buy first before you sell, you have to come up with an upfront of 72%. How many people can afford this? You see? And hence, this you are preventing people from accumulating two properties at the same time in the first place, which will help to cool the resale side. Okay, especially, I would say maybe not just resale, private in general. HDB, 90% to 85%. For the low-sticking bank loan, unchanged, because they are targeting those people, I would say, especially those lower income families. Later we'll talk about it. Max loan for the same, let's say 14K income couple, like just now we say, just to compare apple to apple. Instead of taking the private loan, now we look at the HDB resale. If we are looking at 1.32 million, which is like this one, the Dawson new record loft, and then the amount that they can borrow max is 839,000. That means they have to come up with an upfront of 481K. How many young couples have this kind of money? And HCPF, they have, let's say they first timer and then they manage to qualify for max under the income ceiling Then they qualify for family grant, they qualify for near parent grant, they have total of 60K grant. They will still have to come up with 400K 400K upfront. Let's not even talk about COV. So even if their CPF is cash rich, they can't even use it because they have to pay cash over valuation. And then now we zoom back to something that is more relatable lah, because not everyone can afford this kind, or rather not everyone is willing to splash $1.3 million on the HDB lah. And then we zoom in today. Let's say you go and buy for 650,000 HDB, then your valuation comes out 600K only. That means you have to pay a COV. This one must be cash, cannot touch CPF or all this. COV of 50K. Last time with a 90% LTV, your loan can go up to 540K. That means your upfront is this amount of money, 110. With your grant, that means your upfront is only 50K. But now from 90% drop to 85%, your loan is 510. Upfront becomes this amount of money. From 110 become this. And then even if you minus from your grants 60K, you still have to fork out 80K, from 50K to 80K. For those of them who are not very cash rich, they will find it a problem. And this is the whole aim of the government's intention. They want to make sure that those people who are not really cash rich or what, they want to reduce their COV rate, because once you have COV, you are artificially, not say artificially, you're pretty much driving on the prices, drive up and up and up and up, and they want to reduce the COV, chances of COV and the quantum of COV, which will hopefully then help to reduce the prices of HDB. Okay, and hence this LTV is to, like what I mentioned, lower COV purchases, reduce the overstretching, especially for the lower income, and regulate the HDB resale, whereas bank loan for those already taking bank loan, because those people who are already taking bank loan, you are coming out upfront with 25%, then plus a buyer stamp duty, which is about 3% plus minus 5400, and then you still got a legal audit. So which is about 3%, 28%. That means you're quite well off already. You have quite some financial discipline. But they want to control those people who do not have a lot of financial discipline to prevent I say all this kind of thing. Because you know HDB loan especially. The thing about HDB loan is, yes, you can borrow more. You can borrow 90% last time. But the one that is a killer is 2.6%, which is quite painful. And if they take full 2.6%, 90% LTV, that means their monthly installment is going to be quite high. And if they don't have adequate financial discipline, they are not going to be able to afford this. And this is what the government wants to stop. Okay, so as you can see, ABSD, generally, you target the high net worth, TDSR, target more of the middle ones, and then the HDB LTV, HDB only, LTV, target the lower income. Okay, that's what we see lah. Whereas for those of you still selling, or rather most of us what we are expecting today. Before all these cooling measures, you see people, Chong Show flat, 75%, Canning Hill, 3,000 PSS, still got 77% sold. Now I would seriously doubt this is going to happen because of new cooling measures. For those of you selling or resale, you may want to know that maybe the number of buyers coming to your place will be a little bit lesser. Their offers are going to be a little bit more tame. Maybe not because they are really affected, but imagine if you were the buyer, let's say you sell a place already. Then you say, everything's so expensive. There's a funny thing, when you sell house, why cannot so expensive? My must hit record prices. But now you buy house, you'll be like, why everything so expensive? So you see, that's the contradiction. When a person becomes a seller, they become greedy. When they become a buyer, after they sell already, they become a buyer, they become fearful. From greedy become fearful because you don't see things in other people's perspective. Okay, and of course, not everyone is like that. I met some owners. They are, okay, market price is like this. Okay, I don't need to sell a call price. I think it's a very good price for me. I sell, move on. And generally, not all the time, but these kind of people, from what I work with, they tend to have good karma. They will go to they will somehow sometimes not all some of them they manage to go to a resale market and then they do find pretty good deals but sometimes maybe it's a karma thing or okay, I don't know Anyway, what we are planning, like I said, what we are planning to see, or rather what we should foresee is that resale demand is going to be a little bit more tame. You don't expect to sell your house that fast unless you are willing to accept market price or a bit lower. Because if I were the buyer, I may not, yes, my affordability may not be affected, but I know that government just threw in a cooling measure. Would I want to take advantage of this new buyer sentiment that, hey, now previously you are papaya, you think it's a seller market, right? Then now it's a buyer's market. So should you sell your house at a more realistic price? If not, then I go elsewhere. So buyers are thinking like that. A lot of buyers are adopting a wait and see, wait and see. Or they don't drop price, I wait. And this was what happened in 2018. And hence you see 2018 came down. Last time go up very fast. 2018 came down. Price stagnate. This one is an outlier. Price stagnate. And then you can see the resale volume from here drop. And then maintain all the way until COVID CB lifted. And then resale volume go up. So for resale market, I will say because these the measures are quite similar to 2018 measures. I will say I expect resale market to see quite a stagnant extended period of time. I would say maybe about up to 1-2 years. Okay, until something happens. It really depends. And then the prices, I also will feel that it's going to be stagnating because of buyer sentiment. Whereas for new ones, is a little bit different. Sure enough, after the cooling measures came in, for the subsequent 2 quarters, drop volume. After that, increase again. After that, drop bit, increase, drop bit, increase. So it's really not because of buyer sentiment it become like this. In fact, the price gradually still move up, whereas this one is like stagnant and then like this. Whereas this one is gradual like this. Because for new launch, for new condos, it's a little bit different. It really depends, not to say that this month or people go crazy, that kind of thing. It really depends on the launch. For example, Q1, you have Normanton Park, large volume come in. So you have very high volume. After that, not so much of a mega launch, and then it drop again. So it really depends on the nature of the project that was launched, and hence also the prices. But I would say the prices, if you are expecting developer to drop prices, I think very, very unlikely. And for those people for those projects that are almost 60-70% sold already, even 50% sold, as long as they have 2 to 3 years to play, I don't think they will be looking to drop the price. Whereas if you're looking at a CCR property where they can go on for 1-2 months without a single sale, they may be panicking. They may want to drop a little bit of prices. So that's where you can pick up the deal if you're looking for this kind of trophy products. But investment, I think you may have to rethink and then really look at a lot of other factors. Okay, so in a nutshell, the resale market is going to be impacted quite a bit, I feel, because of buyer sentiment in the resale market. Whereas new one really depends on the project that is being launched. I don't see any mega big projects coming up. So volume, I expect to maintain around this level, or maybe even drop for the next few quarters because of the lack of attractive big new launches. Okay, and hence conclusion, I think yes, we have quite some cooling measures coming in, but if you ask me, I would say that these cooling measures are not super major. It's not going to crash the market, which, like I said a few times already, government's intention is not to crash the market, but to control the market, make it stable and sustainable. Remember, what they don't want is this. What they want ideally is this. But in order to achieve this, market will like this, through cooling measure, like this, cooling measure, like this, cooling measure. Because over time, people will adapt to the cooling measures. People income will improve. And then they will realize that, hey, actually I can afford, that it's not so bad, it's not so painful, and then I come in. But it will take time for people to accept the cooling measures. And eventually, that is their logic. They want this kind of price movement. Okay, and so like I said, cooling measures not so painful. It's not meant to scare everyone, but it's meant to send a strong signal. I feel that hey guys, we are watching the market. Please do due diligence, and then purchase very, very carefully. Make sure you purchase with your own means. And if I see quite some forums or people talking, today's market, it's not optimistic at all, I cannot make money, that kind of thing. Not to say that you cannot make money, can make money, but the thing is, I think like what I said in the last video, people like to buy what they want to buy, and then they expect to make money. If you want to buy what you want, and then you expect to make money, then I think yes, the property market is very subdued right now. Your chances of you making money is very, very, very unlikely. But if you're willing to dig into the research and find out that what you're looking for is actually opportunities and not what you want and what you really want, but more opportunity, you realize that actually it is still possible to make money from the property market. But the problem is, are you willing to put in the sacrifices? Are you willing to put in the research sacrifices? Like what? If you see a property, are you willing to go rent instead of staying in a place? Who don't want to stay in their own home? Come on. Like I wanted to stay in my previous home before my new one is ready, but I don't have a choice because that one is bigger, nicer, everything done up already to my own taste. But then why don't I keep it? Because all these are sacrifices. And if you want whatever you want and then you still want to make money, chances, like I said, are very, very, very little. Whereas if you're willing to dig into the opportunities, recognize them, know how to look for them, and then act on it, I really don't see why that we are not able to uncover that few gems in the market. Okay, so that is what we have for today. If you have anything, then do feel free to PM me to clarify and or see how I can help your situation. That will be all we have for today, and see you guys. Bye bye.